Hi, we are now coming to the business end of our videos. This is video number 7 for first home buyers. Um, Once we get the loan sorted, we then have questions on different types of loan. What types of loan should we take? There's heaps of loans in the market, and basically there's just a few to be honest. But the banks make it a little bit more complicated. They've got a lot of products and a lot of different types of loans. So we'll cover the main types of loans at the moment. And if there's anything specials that come, we can always discuss. So first thing is fixed rates versus variable rates. You'll hear that a lot. So with fixed rates, as the name suggests, your rate could be fixed from anywhere between 1 to 5 years. You have that option to fix it. Why do people go for fixed rates? Because they have a certain peace of mind. They know that that's the monthly repayments for the next 1 or 2 years. So they have a good mindset and they can work towards it. Once a fixed rate ends, it normally goes to a variable rate. Sometimes it goes to a higher variable rate, but we as mortgage brokers and your wealth advisors, we do come and say, hey, the fixed rate's coming to end. What would you like to do? And we see if there's any room for negotiations with the bank, or if we have options to refinance and help you buy another property, we do get in touch. So that's where the fixed rate works. Just be mindful, please be mindful that when you lodge an application, and let's say you found a property, we lodge an application, and today the fixed rate is, let's say, 4.5%, for example. And by the time you do the loan and you get the keys to your property, it's normally 6 to 8 weeks. And please don't expect that the fixed rate will still remain the same. If there is a change in the market circumstances, your fixed rate could change unless you pay something what is called a rate lock fee. So it could be anywhere between 0.15% of the loan amount or 750, whichever is less, just as an estimate. So the rate lock fee is very important with fixed rates. You got to keep that in mind. Anywhere between 1 to 5 years, you got to keep that in mind. You can choose that thing, and those are and once the fixed rate ends, it changes to variable. So those are the main things. But like, as I said, the biggest advantage of fixed rates is it gives you the peace of mind. The other thing about fixed rates is you cannot make early repayments during a fixed term. So you still can make a certain amount, $10,000 to $15,000, maybe up to 20,000 in some cases, but not beyond that. So yeah, that's the fixed part. The variable part, as the name suggests, is if there's an increase in rates, it goes up. If there's a decrease in rates, again, it goes down. So you've got the best of both worlds, and you can make as much as extra repayments as you want, but there is no certainty on the repayments, and it could change with the market direction. Look, there is something called an offset account, which is linked to this loan. So we can talk about that a little bit later, just in the same video. But before we get there, so we also have that option. We do this for lots of our clients. We can split a loan between fixed and variable. So let's say you've got $100 worth of loan. I know the numbers I give is ridiculous. Let's say $100 worth of loan. You can give 70%, $70 as fixed and $30 as variable, 70-30%, or whatever percentage you require. There are times when the fixed rates are higher. So there are times when the fixed rates are lower and the variable rates are higher. So it's really difficult to see what circumstances we are at the moment, but when time comes in, we can always discuss that. So we can do a combination of fixed and variable loans so that it gives you the best of both worlds if you want. So yeah, the last thing which we would like to discuss is the difference between a basic and a package loan. With the basic loan, it's a very simple loan where there's no annual fee, no frills, nothing. You can make extra repayments if you want. So it's normally a variable loan. With package loans, it's a variable loan. You can have a fixed and variable mixed with the package loan, but there is normally a $395 fees associated with it, and you get an offset account and you get a redraw facility with that, and sometimes you get a credit card as well. So yeah, so those are the basic things. There are other different types of loans as well, but it's not that important to get started. I will leave a link in the description with other types of loans, but fixed loans, variable loans, splits are the basic loans, and it's either on a basic basic loan or on a packaged loan. That's all it is to get started. Again, we can discuss this in your circumstances. Everyone's different and everyone wants different things at different times. So when we have a chat, we tailor it according to your situation and according to what the market is doing. We have a little bit of understanding, but again, it's all depends upon you, what you want at the end of it all. Thank you for watching, and see you in the next video.